So, should we buy or sell Verastem? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So here we have the megatrends. On average, they are very substantially outperforming the S&P 500 from the lows. We will now look at a theme that I call precision oncology. So here we have it. So oncology. It's a scientific word for cancer science. So these are companies that they develop ways to deal with cancer in a very precise way. Because one of the issues with cancer treatment is that it's been very much a shotgun approach. Yeah, but the ideal, of course, is to be very sort of like laser focused and only take out the cancer cells. So here is Verastem, 17% from the 52-week low, but a whopping minus 76% away from the highs. So here is their website. This is where potential turns into possible. Committed to ensuring no cancer patient runs out of options. RAS pathway-driven cancers are highly aggressive and often recur, so patients rarely experience optimal outcomes. We recognize that too many patients with RAS pathway mutations have been left behind with advances in cancer treatment, and we are committed to pursuing paths that haven't been fully explored to deliver better options and ultimately more hope for these patients. So yeah, let's look at the charts. So these are weekly data points, and the reason why this stock jumped up onto my radar is because of this. This is a major horizontal support level. Huge, big deal level. It is extremely important for the bulls to start to rally. They really cannot lose this horizontal support. If they get below this, it's simply not good. Very bad indeed. But this is a good opportunity for the bulls to rally the troops. And some of the previous times, this support level has been extremely profitable. Like this rally here, as an example, all of a sudden you get 315% rally. This back here, all of a sudden you get 288%. And if you look at this level here, all of a sudden you would have 760%. So this is a level that it hasn't always worked for the bulls, but when it has worked, well, let it put it this way: it has worked way better for bulls than bears. Yeah, and this is interesting. What I do see here that is a bit unfortunate is this resistance level. Oops, okay, that's a bit big, but you can see that the purple 20-week moving average, it is currently being shorted by the bears. Looking at daily data points, you can see here that this blue 100-day moving average is the key level here for the bears, and you can see that here the bulls try to break out but fail, and a bit similar here as well. Let's look at some of the other indicators. So looking at RSI, some of the previous times, let's go back, like back here, when we were dipping below this deeply oversold level, it eventually led to this very strong rally. And this is back in 2015. Similar here as well. We got, very deeply oversold. And it eventually is resolved through a spectacular rally. So the current context in terms of RSI and PPOs, it has been favorable to the bulls. More favorable to the bulls than the bears. Looking at the daily data points, we have seen a bit of a rally, from these lows here in May of this year. But yeah, overall, this is more interesting, I think, from a bullish perspective than a bearish. So horizontal support, and this is big deal support level. Very interesting. It's a great opportunity for the bulls, and they have no excuse not to take advantage of this opportunity. They really have to. We cannot lose this support level. if we do go below it, then we will have like such a massive resistance level that will just be very difficult to get above. So I think I will give the bulls, I think I'll actually give them a 5. This is really good, but it only is good, of course, if we have enough bulls that buy into this level. That's the thing. So now it is all about getting support. So let's look at seasonality. So in blue here, over the last 5 years, we do see that the seasonality, no, the blue is over the last 7 years. Okay, over the last 7 years, the seasonality here is not that good. In green, over the last 5 years, we usually see some weakness here heading into later June, but then we see some strength. Looking to the left here, over the last 5 years, June is actually one of the strongest months. That's bullish. July, August, September are not bullish, but June is most relevant to us anyway. Looking at the last 11 years, June does close higher 45% of the time. And looking at the average returns here, 1.5 for May, but 4.2 for June and 2.7 for July. So June basically is one of the best months for this stock. So the seasonality we did find here, it was more bullish than bearish, but not like roaringly bullish. So I will give the bulls a 2 here on seasonality. So SACs, they have a number 4 sell on the fundamentals. F value score, but there is a C growth score and A momentum score, so the style scores are a bit messy. The industry rank is interesting, so we are in the top 40%. Medical, biomedical, and genetics. So it's a bit mixed messages. Market cap 219 million US dollars. Beta is slightly lower than the market. A bit surprised to see that. Looking at insider activity. So for me, it was a bit messy. You do see selling, but then buy. And then here you can, yeah, so the insiders are not, they're not bullish. They're more bearish than bullish, but they're not like purely bearish at least. So here is the consensus estimates. So you have 5 analysts covering the stock. Average price target is 360% above. That is obviously, pretty bullish. Highest is 411% above, and the biggest pessimist, Mr. Doom and Gloom here, thinks the stock has a 326% upside. Okay, so upside. So I do think I will give the fundamentals here. I think it's a 5 here as well. This is good fundamentals. So now let's look at some correlations. So we start long term with weekly data points. 40% with the S&P 500, 37% with XLV, which is the broad healthcare ETF. And then we have 60% with CNCR, which is the cancer ETF. Then minus 48% here with the dollar index. Daily data points. 73% with S&P 500, 31% with XLV healthcare ETF, 94% with the cancer ETF, and minus 61% with the dollar index. So the ETF that will have the biggest impact on Verastem is obviously the cancer ETF. So here is the cancer ETF. There were some opportunities to form horizontal support here. We did get a bit of a rally, but then it completely fell to pieces. We are very oversold. But the bears are still making progress. So it's very messy, because when I see a chart like this, I'm more scared about shorting than going long, but I'm not like super hyped about going long either. But if I was forced, to make a decision here, I would prefer to go long instead of short, simply because we are so low here that just a basic technical mean reversion could just ravage the bears. And so here we have the daily data points. We do see that on Friday we did stop near the lows here of early June. So there's some, not exactly bullish activity, but some sign that the bears have hit a bit of a floor. So here I am comparing Verastem against the cancer ETF. Yeah, so it's a bit all over the place here. Maybe there are some time cycles. Let's have a bit of a look here and see. So it is a bit time cycle-ish, but the time cycles have differed, over time. But you see that these time cycles, they do sort of work. Rise, decline, rise, decline, rise, decline, rise, decline, rise. So given that, during previous rising phases, the peak of price has been either towards the middle or a bit before the middle. But based on the current, time cycle, it means that we sort of expect Verastem to outperform the cancer ETF, leading into, at least later July, maybe even potentially September. So interesting stuff here in terms of time cycle. We also see here that previous rising phases have peaked near this high RSI levels, and we are far away from that. So there's more fuel left in the engine here. So interesting, very interesting indeed. So let's look here at the seasonality. So Verastem has a tendency to underperform the cancer ETF leading into late June, but then it tends to outperform. So that's something to take into account. Then let's look at the cancer ETF against the XLV, which is the broader healthcare ETF. And we start here with weekly data points. Yeah, so cancer ETF has just substantially underperformed the healthcare ETF. Looking here at RSI, we are at a very low end of this relationship. That is obviously not a guarantee that it will then revert to the upside, but it means that statistically speaking, we do have a rare event. Looking at the daily data points to gauge. Okay, so here we have something interesting. This looks like something that very much could evolve into a rounding bottom pattern. When we look at seasonality, yeah, the cancer ETF tends to underperform XLV leading into 5th of July. Now let's, towards the end, compare the XLV against the SPY. So there's been some lower highs here and lower lows. You see that we keep failing at a very similar RSI level. If you look a bit at the seasonality, what does it prophesy? So XLV has a bit of a tendency to outperform the SPY leading into 23rd-ish of June. I think the most important thing we found here was rather favorable to the bulls. So I do give the bulls a 4 here on relative performance. So we end up with a score here of 4.0 in favor of the bulls. The absolutely critical part of this thesis is horizontal support. The bulls absolutely must utilize this opportunity. This is a big, big, big deal support level. They cannot afford to get below it. They just can't. But yeah, this is a great opportunity. The stars are somewhat aligned here for this stock, and the ETF related to the stock as well. But the stock, of course, is in focus here. So yeah, this is interesting. And another way to sort of think about these types of stocks is that something that some people do is that they have different investing accounts for different purposes. So we have like a trading account, you have a long-term, and something that I am very much a fan of is having a charity account. So you have a specific account where you do charity investing. So that would be something like actually diamond handing cancer stocks as an example, or other types of stocks that are helping people. because the big difference between donating, well, of course, donating to cancer uh, organizations, NGOs, is obviously, of course, very much a good thing. Buying stocks, in companies that are doing research into cancer is also a way to help people with this condition. So it's an interesting way to think about investing. So whatever you do, of course, you do definitively want to go to diamondarm.com, and yes, have a great week ahead.